If you have ever wondered what it's like to be on the insurance world, or if there's a litany of questions that you've had about how do they do insurance, at what amount, that's what we're going to cover today. We have my good friend Brandon Kopp in from Tidewater Insurance Brokers. He is the man. He just saved me $3,300 a year between all the bundling that we just did.
That is true.
Yeah, and so
it doesn't always work that well. I'm just going to be honest.
Well, maybe he cut me a specific deal because he was going to be on today and wanted to make himself look good, but that's okay. That's what I would have done at least.
Right.
So we're going to talk everything insurance and maybe a little bit of business and being a local here in Virginia Beach, Norfolk, coastal Virginia area. Welcome.
Thanks, man.
Glad to have you on.
Love being here. Love being around you.
So I got to know Brandon actually through a mutual friend, Ashton, who his family business is kind of wealth management, that type of thing. So I'd love to hear more. How did you even get into insurance? What got you into there, and how long you've been in business? Tell us a little bit more about yourself.
Yeah. So for me, COVID happened, and I was working as a sales manager for an insurance company that was remote. So we were based out of Philly, had a small sales team, doing really well. We were in an unfortunate industry for COVID. So we were in college, professional, and minor league sports. We all know what happened when COVID happened. All that stuff got shut down.
Sure.
So I had just bought a house. We were scheduled to have our first baby in that May of 2020.
No pressure, no stress.
No pressure. Pretty much lost my job. I mean, they kept me on, but the writing on the wall was, we don't know when these industries are coming back. So
yeah, there was a lot of uncertainty.
There was a lot, yeah, for a lot of people.
It was like March-ish time hit, and I was like, am I going to go out of business? Like, how am I going to feed my family? And for 2 weeks, it was like nothing. Crickets, because the world hit. It was like, what was it, 2 weeks to slow the spread or something was like the mantra that was going on.
Right.
And it was like I got no calls, and then basically interest rates dropped again from where they were, which was great. But then my phone wouldn't stop ringing, and from like March to 2022, at least the housing market to a degree,
crushing it.
Yeah, it was just like if you had a pulse, you could sell houses.
Yeah.
So anyway,
you weren't a weirdo, which you're borderline, but.
Fair enough.
People trust you.
Yeah, I don't know why, but it's okay. It's the YouTube channel.
It's the YouTube channel.
Yeah.
Yeah, so, May 2020 happened, bought a house, had a kid. I was looking at something different to do, and I had an insurance background. So it was a jumping off point for me I just turned 30, was at a crossroads in life and career.
Sure.
And it was, hey, let's do this by ourselves. I love being around people, love managing people, love building a team, building a company, connecting with referral partners, building solid pipelines of business for a company.
Sure.
So I was like, I could do this on my own. At least I think I can. So we started the company in November 2020.
Who's we?
A good friend of mine who owns a law firm here locally.
Yep.
He owns a couple different businesses. He was more just a mentor, coach to me. We went to the same church. Yeah. Had become friends over the years, surfing buddies, and it was he was a great connection for me. I didn't have much capital. I'm going to be honest with you at that point.
Yeah, that's all right.
So he was willing to invest in me and be more of a silent partner, mentor me as far as owning a business. And so we launched 2020, November, day one.
I can tell you that has consistently paid off for me. That mentality of pick the person, do the skills come after.
Yep.
If you have somebody who's hungry, willing to learn, but has the right character, and this has been Sean behind the camera, it was one of those choices. Lily, my ops manager, was one of those choices. Jamie, my transaction coordinator, was one of those choices. Yeah. Now, every single one of them had a skill set, but every single one of them I picked on character first.
That's good. Yeah, that's paid off for us because we are up to 5 employees in under 2 years.
Yeah, it's a lot of growth.
So, and it's literally just down to hiring good people. We pick the people over the skill set. I mean, we literally just hired an art major to do sales because she's fantastic with people. She cares. She's hungry. So it's been awesome, man. We obviously the only reason we do business is because people trust us. And that's just paid off.
Sure.
So
I'm curious, out of the business that you get, how much of it is direct, like let's say website, that type of thing, and how much of it's referral partners, word of mouth, that type of thing?
Referral partners probably are like 99% of our business.
Really?
Not even kidding. Like
Wow.
maybe 3 to 4 people a week come in from our website or, but rest is word of mouth. Work a ton with loan officers. They're a huge source of referrals for us. Yeah. Real estate agents like yourself. Yeah. People who trust us and see the value in what we bring.
Yeah. Well, I mean, a lot of that comes down to, I think if you talk to real estate agents and loan officers, so much of that relationship is trust-based. And then say, hey, here's this person I use over and over and over again.
Yep.
You should talk to them. And it's almost, to be honest, teeing you up is super easy because I know out of just doing this long enough that if they will just have the conversation with you, one, you guys are super easy to work with. But two, I don't know if there's ever been a time where you couldn't save somebody money.
Yeah. It's pretty rare.
It's like easy. It's like, hey, here's great people to work with that are also local and they can save you money. Oh, no, I don't want that.
Yeah. And if we can't save people money, we tell them that's because you have an awesome policy or great insurance person you're already working with and keep them. Sure. Because, you're not always the right fit perfectly at the right time for people. So being comfortable with that and that's actually helped us earn trust too, because we'll tell people straight up, the policy you sent us, we can't find anything under that. So we're going to be honest with you.
Well, I mean, that's true with any industry and with any product or service, right? So like you want to go stay at a hotel room. Well, there's a difference between going to Europe and staying in a hostel, coming to the United States and staying in Holiday Inn Express, and then going to New York and staying in the Ritz-Carlton, or even then staying in a really boutique restaurant or a hotel that is not affiliated with any brand, but is like super, super high end. Yep. Right? If you're expecting to pay a certain price and get a certain experience, you can't expect to pay the same price and get the same experience.
That's a good point. Yeah.
At least for my stage of life, I'd like to save some money. But to be honest, there's a reason I have switched back to Verizon when I was switched off, because their customer service is great. Yeah. I was with them for 10 years, switched to another carrier, which I will remain nameless, and then switched back because I was like, the customer service experience was so much better with Verizon. And even though it was a little more expensive, I was willing to pay it. I've had the same thing with USAA. Yep. I know USAA is not the cheapest, period. Yeah. You know that. Yeah. But their customer service is good, really good.
It's really good. When I canceled my policy with USAA, they treated me like I won the lottery. It was like, oh, absolutely. We'd love to have you, obviously, but, do whatever you want. Do whatever is best for you. And it was like, wait, do I really want to cancel these people?
Yeah. Yeah. They're really good. You almost feel guilty, too. They're so nice about it.
Yeah.
Yeah, that's funny. Yeah, I think that's for sure one of the things. But I think you guys have a really good balance of great customer service. And
we
also,
think so, too.
Part of that comes, could you explain for people the difference between being an insurance broker and other models?
Yeah, so a broker simply means we have access to tons of insurance companies that we could put you with. So what's nice about that is Dan Inman sends me his information. I type it all in, all the details. I send it out to, let's say, 20 different companies. They all come back to me with a rate. I can kind of pick and choose, all right, based on coverage, based on what Dan wants, and based on price. Hey, I'm going to send Dan the top 2 that I find. Right. So it can be helpful in that I'm not a State Farm agent. State Farm, even though, again, great company, there's a reason they're the biggest insurance agency in the world. Sure. They have one price they give you. They can only go one place, and that's State Farm's rate. Sure. Same with the USAA. Sure. So
we've seen it with Rachel in the loan world, is that working with direct or local lenders who are borrowing from their own pool of money, there are benefits to that. There are pros and cons of every business model that's available. But I would say right now in this environment, the broker model, especially in the loan world, is it's very difficult to beat. Yeah. Because their efficiencies, their economies of scale, the way that they're set up, this environment that we're in right now, they're thriving really, really well. Yeah. And so these direct lenders and other models sometimes have a very difficult job, if anything, because people tend to be very rate conscious, especially in a rising interest rate market. Yeah. It's hard to beat her. Yeah. Very difficult. And Rachel's customer service is so good. She's in the other room. Rachel comes from the hotel industry, and so this idea of they had, I forget the name of the rule, but they would effectively, if you could make eye contact with somebody, you always smile and say, hey. Yeah. If they're within a certain period, you ask them how they're doing. If there's anything you can do you can do to help them out in their day. And it was it was this extreme emphasis on like customer service, making sure that they're getting the highest quality or highest level of service possible.
Rachel wants to be the best.
Yeah,
she doesn't want to give the second best rate, probably.
Sure.
Knowing her.
I mean, that's kind of our model together. Part of the reasons that we're in business together, and I would say probably similar, the reasons that we liked you guys is I don't want to be the cheapest. You know, Seth Godin, who, if you know anything about like marketing world, he's one of the greatest of all time in the marketing world. So I'd much rather compete on like, hey, be competitive, but we're going to beat them on customer service. We're going to beat them on like making it easy, like making the process smooth all day long. And so, you know, anyway,
Love
so
it.
the models. So I think what I'd like to kind of jump into is kind of like kind of some fire round questions on like just some easy
test me.
Yeah, some lobbers out there. What exactly is like if I'm going from renting to homeowning? I know nothing about home ownership. Why is there a difference between renters and like homeowners policies?
Yeah, the big jump for a renter to a homeowner is when you're a renter, the only thing you cover in a renter's policy really is what you own, right? So maybe I have 10 grand worth of stuff in the house that I'm renting, maybe a sofa, maybe a bed, right?
Laptops,
jewelry, that type of thing.
Okay.
That's the important thing you want to cover as a renter. When you jump to a homeowner, now you are actually on the line for what you just bought, right? So the structure of the home, what's inside of it now is probably a lot more because you're having to furnish the whole house, refrigerator, washer, dryer, your personal property. And then there's now an added element of loss of use. Maybe you can't live in the home for a certain period of time. Who's going to pay your mortgage? And also a liability risk as well. Which comes into play a little bit. As soon as you're a property owner,
you're now liable for things you wouldn't be liable for as a renter.
Yeah. I don't know. Your porch collapses while someone's on it. You know, if that happened to you while you were renting, you'd shoot your landlord a quick text or call and be like, hey, you might want to fix this problem. Someone just twisted their ankle. You know? But now liability falls on you because you own the property. So insurance comes into play for all those things. It's kind of like a next step up for you.
So I'm looking at this policy and I'm trying to figure out, I'm reading through the fine print. I'm trying to figure like what the heck is the difference between like rebuild cost and market cost, and it's confusing. Again, I'm looking through this first time. How do I make sense of this?
The biggest question I always get is when I send someone an insurance quote. Let's say you're buying a 3,000 square foot house and I'm insuring it for 500 grand. You paid 800 grand for it. The first question is always, well, why is it not insured to 800 grand? The biggest reason that is because you bought it for market value, right? So that factors in land cost, that factors in location, market value. So right now we're kind of in an inflated real estate market, or maybe coming out of it right now. Versus rebuild cost. So rebuild cost is, I'm going to insure your home for what it would take to rebuild it. If we're completely knocked down, that's what insurance really is for. It's not to cover your purchase price of the home. A lot of people want that, but the thing is, people don't understand is if your home is not completely down, the insurance company is not going to pay you 800 grand. They're going to pay the minimum it takes them to rebuild it. So it's going to take them 500 grand to rebuild. They're not going to cover that extra 300 grand for no reason, just for fun. Right.
How does that work with, so like my house is built in 1912, right? And some of the building methods and construction used then isn't really even available today. So like I've got triple wide brick in some places in my house. There aren't a lot of masons that even know how to do that today. So how does that work?
That's a fantastic question. So we call that standard rebuilding and vintage rebuilding. So a lot of, without getting into too much detail, a lot of carriers we quote with differentiate. So there's a standard model of rebuilding something that doesn't involve whatever you just said. I've never even heard of that.
Don't worry about it. Triple wide
brick.
It's basically structural masonry, right? Instead of the stick, meaning the 2x4 carrying the load, the brick is carrying the load.
Gotcha.
So like the offices across the street, that's
brick all the way through.
Brick all the way through.
Gotcha. So if you build your home with a vintage And if you tell me as your insurance broker, hey, when you go to estimate the rebuild cost of my home, I want it rebuilt exactly like it was in 1912.
But I have to specify that as...
Yeah, and usually
okay.
if you have a good insurance broker, they're going to ask you, they're going to say, hey, your home was built in 1912.
Yeah.
If we rebuild this thing, worst case scenario, do you want it rebuilt in a vintage way or do you want it standardized?
Mm-hmm.
Standardized is going to cost less.
Yeah.
As we progress throughout history, we've figured out
Yeah.
cheaper ways to do things.
Mm-hmm.
It usually still looks the same,
Sure.
but it's not, well, you can maybe speak more to this, but I'm thinking if you build your home completely out of brick, it's going to probably last longer than if you build it otherwise.
In the construction world, you would, or even potentially, you would call it the pro forma. So like a pro forma would be a analysis of cost and like what, if I'm investing into something, what is like the years of ownership, the cost, and then the return and that type of thing.
Okay.
Right.
Yeah.
And so you have what are initial costs and you have lifetime costs. Initial costs are, well, how much does it cost to build right now? Lifetime cost is how much does it cost to maintain or replace over a period of time. Slate roof is a really good example of this. Buckingham slate, it'll last 200 years.
Yeah.
Right?
Right.
3-tab asphalt shingles, 15.
Yeah.
Right? Especially if it's close to the ocean front, right?
Yeah.
Or if it's in a high like hail or rain area. And so, yes, the asphalt 3-tab shingle is far cheaper at the beginning, but it has to be replaced more often and it requires certain maintenance.
That's a good
Buckingham
point.
slate,
Yeah.
it has a very high initial cost, but if it's maintained properly, can last over 200 years. And it, basically a slate every now and then falls out, or some of the flashing details, metalwork has to be done.
Yeah.
So you're looking and evaluating, well, all right, if I as the homeowner only have X amount of dollars, I may not have, even if I can agree that the lifetime value or lifetime cost of slate is better, some of it's aesthetic, that type of thing, things that the specific look that you want.
Right.
And, it's prestige, I think, built into these. There's a reason people buy a Mercedes over a Corolla. The Corolla gets you where you need to go, right? Yeah. So it comes down to the individual and what they're looking for and what their budget looks like.
Yep, exactly.
So,
yeah.
Cool. So if I'm looking at my policy, and I have a lot of homeowners that will say, Dan, I have this payment, PITI, principal, interest, taxes, and insurance, right? And one of the things I will consistently tell them is, hey, one of the things that can change is the insurance, because I don't know who you're going to pick, what kind of coverages you're going to do, what kind of deductibles you're going to do. And sometimes they get that glossy-eyed look of like, what the hell did you just say to me?
Yeah.
What is a deductible? How does that work?
Yeah.
For someone who's maybe brand new to the insurance thing, what the hell is a deductible? And, what does that do for me?
Simply put, it is the money you pay before the insurance covers anything. Mm-hmm. So if I have a tree fall in my house and it costs $2,000 to repair, remove the tree, and fix my roof, and I have a $500 deductible, I have to pay the $500 deductible before my insurance company will even think about covering anything else.
Okay.
So it's a way for insurance companies to eliminate smaller claims. So let's say a tree branch falls on your house and ruins the gutter, and it's like a $50 fix. Do they want Dan calling in and submitting a claim for $50? No, because they don't want to cover $50 every time that happens.
Sure.
So they basically put kind of a minimum damage amount, so that it kind of gives some accountability for the homeowner to not keep submitting small claims, and also protects them on the small claims, and then they'll cover the rest on the big claims.
Because you're brokering the insurance, but the insurance carriers themselves, the people who are writing the checks at the end of the day, are running a business, right? And they want to maintain profitable. So like I think our profitability words. And Sean always gives me these looks when I make Danisms. Words are hard. So I think our deductible is like $3,000 if I remember correctly. I can't remember that. What's kind of the range that is kind of, let's say on a $500,000 house?
Yeah.
And I'm getting mid-tier coverages. What's kind of the ranges of deductibles people can see?
So standard in Virginia, we think about deductibles a little bit differently than most other states.
Okay.
So deductibles for us are deductibles that covers anything except wind and hail damage. So in Virginia, you have a separate wind and hail deductible. It's kind of a strange thing, hard to wrap your mind around.
Well, we live on the coast.
But you live on the coast, right? Yeah. Most claims that happen in coastal Virginia, especially, are all wind and hail related claims. So insurance companies make the wind and hail deductible usually a little bit higher. So most regular deductibles that cover anything from, fires happening to, let's say a tree branch falls on your house. That is usually $1,000. That's pretty normal. That's usually as low as insurance companies go. Some go to $500. Then for wind and hail deductibles, that is usually 2% in Virginia. And by 2%, this is tricky, math's involved, but 2% of your dwelling value. So if I insure your home for $500,000, 2% of that is what? $10,000, right? So I would have to pay $10,000 for any wind and hail related claim before the insurance company would cover it. Which is why it's great to work with us. And funny that I just sent you a quote because you guys had a high wind and hail deductible. So I sent you quotes with a lower one. Hey, if you don't want to be shelling out $10,000, you could bring it down to 1%, or some carriers in coastal Virginia even have a flat $1,000 wind and hail deductible.
So that hits, I think, a really good point. So, we have these ranges of deductibles. If I understand correctly, the main reason somebody would do a higher deductible is because it brings down their policy. Their month-to-month cost comes
always
significantly
cheaper.
down.
Yep, always cheaper.
Right, and so there's always this balance between, all right, well, how much savings do you have on hand? What's kind of your income level look like? And so maybe you have a higher deductible because it's like, well, this is the only thing they can afford. Because I've had situations, especially first-time home buyers, where it's like, all right, the numbers are so tight for them to be able to close on the property.
Yeah.
Now, I'll say this outright. If you cannot buy a house because your insurance costs, you have to play and go talk to 20 different providers to be able to afford the home, in my personal opinion, you shouldn't be buying. Okay, I know that's going to be controversial. You're going to get mad at me, but I think that you need to be either increasing your income or increasing your savings to be before you move forward. Just because homeownership is different than renting, and I think it's stupid to put yourself in that position.
Yeah.
But the main reason that we would increase that deductible is basically to make the monthly
make
cost
it cheaper.
Yeah.
Yeah.
So hopefully, somebody, you can yell at me in the comments if you want to. Yeah. Dan, why are you telling people that they shouldn't buy houses? Aren't you in real estate? Yes. Don't buy a house if you can't. Don't be house poor. All right, so we got, one of the questions I think I wrote down here was like, what does home insurance kind of cover? And it seems like there is a long laundry list here. So I've got like dwelling, other structures, personal property, liability, medical pay, loss of, life or limb. Then people kind of probably wonder, like, what about regular wear and tear? Like, if my AC unit kicks out earlier than I think it should, right? This guy told me it was going to last 10 years and only last 7. Does insurance cover stuff like that or no?
It does not, and that's a pretty hard no too. A lot of people are like, is there any gray area? And it's really no. It's one of those things. You basically have to submit a claim, you have to prove that it's not wear and tear, right? So
can you make an analogy maybe between like cars and how that relates to maybe houses? Yeah,
so if you just bought a nice electric vehicle, right? So if you drive that thing and the tires start going bad, right? Are they going to replace your tires for free because you've just been driving a lot? Or, well, maybe they
drifting around corners.
Yeah, drifting around corners. Or are you going to have to go out of pocket for that replacement? So it's the same with home ownership. I mean, if your AC unit goes bad, it's kind of a too bad. That's not insurance related. Now, what I will say, and I'm not the expert in this, but home warranties, you've heard that phrase thrown around, and we don't have to get into that.
Well, I think we can dive into it a little bit at least for the person at home who's trying to figure out like insurance, home warranty, and like manufacturer's warranty, right? So you have, or even maybe installer's warranty. So a lot of times installers, you go hire a local HVAC person, they will warranty their work, right? Doing the actual install itself. Did their laborers install the ducting properly? Did they hook it up properly? Does it have the right electrical going to it? Because if you have an HVAC system and you hook it up wrong, well, the manufacturer is going to be like, no, it's not my fault. It was installed wrong, right? You go and you install a starter that's supposed to be on a Chevy and into a Toyota and just force it together. It's probably not going to work out very well, right? And so there are, there are warranties or plans. So making sure that you get the right installer, someone who's been in business for a long period of time, has a great reputation. That's important because you want somebody who's going to stand behind their work. A lot of times these installers will give you the additional paperwork. So like I have a Bosch system, HVAC system in my house. There is also the manufacturer warranty. And the warranty on that is, hey, us, Bosch, the person who made this unit, or Bosch, probably someone's going to yell at me about that one, is is that this unit is good for this many hours or this period of time.
Yep.
Right. Then you have a home warranty. Now, home warranties, man, you want to get people up in arms on disagreeing. That's a really good topic to do. Yeah. Personally, for the most part, I think they're a waste of freaking money, because much like insurance, and a lot of times they're trying to cover the least amount possible.
You're making everyone mad right now.
Right. So I'm okay. I'll make everybody mad. But can they be a good tool? Sure. Like if you're buying a house for the first time, right, and you go in there, the HVAC system is 6-7 years old. Okay, they don't have any maintenance records. They can't show that it was serviced on a regular occasion. It's located, it hasn't been cleaned, that type of thing. All right. Well, if you can negotiate into the contract, a good real estate agent should be able to do that, can get you a home warranty for a year or two. Hey, the seller's paying for it, and it may not cover the full cost. So let's say that the replacement cost with labor and such is $7,000, $8,000, $9,000, and the home warranty ends up covering half of it, of what you didn't pay for.
Sweet.
Great.
Yeah.
Right? But the majority of the time, one, you don't get control unless you go with like a Choza, I think is one of the ones that are out there, and you can say, hey, I want these people to go out and service the equipment. Yep. The majority of them are sending out some contractor they have a service agreement with, okay? And that service agreement is them working with the home warranty company, right? And the reason they do that is because it's consistent, guaranteed work, right? And it's usually negotiated at a lower price. Well, usually the person who is looking for consistent, good work at a lower negotiated price doesn't always mean that they're the best also HVAC person.
Right.
Their job is to go out there and see what is the minimum I can do on this thing to kick it down the road and do the lowest possible claim.
Right. A
lot of these home warranties also have a deductible as well, right? They're going to go out there and they have like this capacity where it's like, all right, well, if we replace this, it costs $50 for the deductible. We'll kick the can down the road. It might work for another year and a half.
Yep.
Insurance. But if you have a tree in your backyard that falls down and busts your HVAC system down, now is the insurance company going to look at the age of the unit? Here's a question where you can answer.
Yeah.
Right. So how does that work? Right. Do you care, or does the insurance provider look at like, well, was it serviced, or what's the age of the unit, or how does that insurance side of that work?
No, there's no discussion around that. It's the insurance companies are trying to figure out, all right, how much was that AC unit worth, and how much will it cost to replace it?
Yeah.
Yeah. And they will replace it. They usually just will buy you a brand new unit. Mm-hmm. Obviously, that's comparable. They're not going to
well, if the tree smashes it, it's not going to get repaired.
Right.
Yeah.
They're going to try to get a comparable unit. Mm-hmm. Obviously, they're going to get you a brand new one. They're not
Sure.
going to get you a refurbished one or anything. But
how does that work with because there are different tiers, much like you can buy like a Corolla, a Camry, a Lexus, top tier Lexus. There are same things with the HVAC unit world. Are they looking at the make and model and then trying to do basically a replacement of the similar size?
Yeah, they're going to try to get you a very similar unit.
Okay.
Same kind of price range. Cool. Yeah.
So that's how I would look at it. Is I'm looking at, all right, well, you have the manufacturer, you have the installer, you have the home warranty, you have insurance, and each one of those things is a little bit different. Now, there may even be some overlap there. So if you have a really good installer with a unit that has a great manufacturer warranty, and then you get regular serviced, personally, I would skip the home warranty. They're going to cost anywhere between $450 on the cheapest probably to $1,000 a year. Look, if you're buying a house and expecting that it doesn't need repairs or like maintenance, you're an idiot, right? Like my first car, unfortunately, I didn't think about these things. I should change the oil. I was never told to top that growing up.
Yeah.
It's supposed to take it in and get like the water pump and like timing belt replaced. I didn't think about that. Or tires replaced. These are normal parts of owning a car. There are normal costs associated with owning a house.
Yeah.
So I personally would tell you that, look, if you are a super ultra risk averse person, maybe you get the home warranty.
Yeah.
But I think it's a waste of money.
Yeah.
Just put $1,000 in a savings account for replacing shit when it breaks.
Yeah.
And then have really good insurance so that when acts of God happen or accidents happen, it can fix it.
Yep.
So maybe a really good example would be a leak.
That is a good example. It happens a lot.
Yeah. So, maybe you got polybutylene pipes in Virginia Beach that didn't, that break. And how does insurance work there?
That's a particular circumstance. So polybutylene, it is like a 4-letter word in insurance. Yeah. There is pretty much no carriers that really cover it. Mm. And without getting into the details of why that is, it's essentially because they're set up to be a lot riskier than pipes are now. So I think they stopped putting those in around the mid-90s. Actually, just looked at a home yesterday that had them, but it was built in 1994. So
Sure.
there's very few carriers that cover it. And if your pipes would break and you have polybutylene piping, your insurance company is not covering it.
Oof.
Unless
Get the home inspection.
Unless you were proactive and told your insurance agent and they put you with a company that does cover it.
Okay.
Now, it's usually more expensive to go with that type of company, but what would you rather pay? Maybe $800 more a year in insurance or, $30,000 in fixing that.
Sure.
Because that can be expensive.
It can be.
Yeah.
I think that comes down to getting with a reputable person, agent, or company
Yeah.
who's going to ask the questions like, hey, this is in Virginia Beach. It was built before 1990.
Yeah.
Hey, do you know if it has polybutylene in there?
A lot of people don't know.
Yeah. Well, yeah.
But
it's
it can
still
start a
question.
conversation.
Yeah. I mean, like if you go over the past 2 years, especially the last 18 months when people were buying houses without inspections. Like,
oh, yeah.
Okay,
Yeah.
well, that might be the case. But it's still, here's what I tell people a lot of times. If you're going to buy a house without a home inspection, right, and it's becoming less and less common because the market is cooling off. But if you did, I still recommend that you have a home inspector go in there and do that thing. It's going to cost you $500.
Yeah.
But you're going to find a leak that you wouldn't have found otherwise. And let's say you found polybutylene. Well, at least now you know, and you can make sure it's covered on the insurance.
Yep.
And if that were to leak in the next 2 or 3 years, good. At least it's covered now.
Yeah.
Right.
Yeah.
Trust me, that $500 is going to pay itself off.
It is. Absolutely.
So here's another touchy subject in the insurance world.
Yeah.
Knob and tube.
Oh, yeah. That's another 4-letter word. Yeah.
Why is knob and tube a 4-letter word in the insurance world?
Again, I think it has to do with an outdated way of doing things that led to, in this case, more electrical issues. So fires starting. We've since come a long way in construction, and the way we do things now is a lot less risky
Sure.
to your home. Yeah.
What are there carriers that still will cover it?
Again, there is, but they're usually, and this is a insurance word, but they're non-admitted carriers. So they're people you've never heard of that really focus on
The obscure.
these types of risks, the things that no one wants to write because they're so risky. You end up paying more, and going to be honest with you, a claims process with, this random not admitted company is going to be a lot longer, kind of more of a headache
Sure.
than a mainstream carrier that like we work with most of the
Okay.
time. But again, do you want that stuff to be covered when stuff goes wrong?
Sure.
Yes.
Yeah.
Is it worth it? Yes.
Well, it comes back down to every real estate deal is different. Okay. If you're looking at a house at home that has you find out it has knob and tube in it. All right. Well, how long has it been sitting on the market? Are there multiple offers on it? Is basically the only way that you're going to get this house, because a lot of people fall in love with these old homes.
Yep.
The character is different. The construction is different. It's pretty. It's in a certain neighborhood. That type of thing. If the only way that you can get into this home is by buying it with the knob and tube in place without being able to negotiate it being replaced,
Yeah.
well, then that might have to be a risk that you assume in the first year or two of home ownership.
Yep.
You most definitely want to get it covered. Is it going to be more expensive? Well, that's just something you're going to have to write into
Yeah.
the line item of your budget.
Yep.
But as the market slows down and as the market norms of what buyers expect and don't expect continue to push towards getting away from it, you might be able to negotiate it, right? Grandma and grandpa who've lived there for maybe 25, 35 years are going, well, I've lived here. What's the problem? House hasn't burned down since I bought it.
Right.
But knob and tube, for those who don't really know much about it, is you're lacking a ground. And the system is really, really old, and it's usually built on a certain load, right? It's not built for modern. You go in there, and we have 2 TVs in a room and a sound system, and your iPad's plugged in, and you've got the radio, and so on and so forth, right? Well, shut up, Sean. The radio, yes. Some people still listen to radio, or their boombox, whatever. Back to my point. The electrical load is much higher. Right. And so there are electricians out there that are smart and savvy with this, and you can have a specific inspection where they'll come through and say, all right, well, obviously, optimally, it would be best to replace this, but as long as you're not doing these things in these areas, because let's say that you have a circuit that covers several different rooms, they might go, look, you don't want to have more than this many things plugged in, otherwise it does become a risk.
Yeah.
Because once you start sending too much electricity through a wire, that's when it becomes a fire hazard, and that's why those insurance companies don't want to cover it.
Yeah.
Right? And you have to kind of go with the lowest common denominator. Just like in college, you have to teach the slowest person in class to a certain degree. Insurance, to a large degree, is we have to do to the dumbest person. Right? The person who can abuse it. A lot of car manufacturers are kind of the same way. All right, we have this recommended service thing, but most people are going to forget and be terrible at this. So how do we build things that kind of withstand the average consumer or the average user?
Yeah.
And so that's why a lot of insurance carriers don't want to do this thing, because most people are not going to do that homework. Most people are not going to be like, hey, Billy, I need you not to plug in the iPad at night because the load's going to be too much on the system.
Yeah.
So at least that's my perspective on it.
That's good. You know more about insurance than I thought.
Savvy little guy over here. Or big guy, maybe. What are kind of some of the main things that home insurance does not cover? And maybe you would have to get some type of supplemental insurance.
Yeah, well, we covered wear and tear pretty well.
Mm-hmm.
You did a good job of explaining the different types of way you could go about covering that.
Earthquakes.
Earthquakes are a no-no.
We've had 2, 3 in the last 10 years.
Yeah.
Really minor.
We're not California.
Yeah.
So in a place like California, you could actually go out and get an earthquake policy.
Okay.
Because
Is it required in California?
It's not. Okay. No.
Interesting.
No. But you usually go and get it to cover a certain dwelling amount.
Sean knocking the equipment over there. The earthquake. Yeah,
First earthquake.
Yeah, first earthquake. On camera.
Yeah. So here in Virginia, there's not even an option to get earthquake insurance, even if you wanted it. So
Really?
Good luck.
Yeah.
Yeah. Maybe you could start an earthquake insurance company.
I mean, you could sell the fear of it, and then it never pay a policy out. I mean, Radon is a good example of I've had, especially with the YouTube channel, we have a lot of people that come in from different states.
Yep.
And they'll say, well, do I need to get a radon test? And I'm like, I don't know if I've ever done one of those. Ever. Just because if you go on a map and you type in radon map and look at what the risks are, it's super, super low here.
Yeah.
So I imagine kind of the same thing. It's just not a high risk. Are there things like fire? Like, say you're in a high fire area, or like in California, that that's a big risk.
Yeah. Well, fire's covered. It's a covered peril.
Okay.
Is what they call it.
Is that difference between someone starting a fire in their kitchen and say the kid throws a cigarette in the bushes next door and it spreads over to your house? Is there a difference there?
Yeah, there actually is not. The only difference in fire, so insurance companies don't cover self-inflicted arson. So if I own the home and I'm mad and I want to light my home on fire, which actually happened to me after college, not in my house, but in the house next to me, there's a crazy lady. It was weird. But she lit her house on fire. Right. Insurance company's not going to pay that lady for her house because she did it herself on purpose.
A lot of times insurance companies will do investigations of if there's any type of red flag, a little curious here, what's going on.
Yeah. Okay. Now, if I leave my stove on and leave my house by accident, that's exactly what insurance covers. So
has anyone ever do a lie detector test for an insurance claim?
Oh, there's had to be something like that.
I kind of want to know the answer to that. Yeah. That'd be curious.
Yeah. They have just a jacked, intimidating guy that sits you down in the room by yourself.
Puts the light over the top.
Exactly.
Yeah. Has a guy with a Batman voice.
Yep.
What did you do?
Yeah. It's exactly what happens in insurance. Yeah. So that's something that is covered. I'm trying to think. Other things that aren't covered.
I see you put a note in here for nuclear.
Oh, right. So
or war.
Yeah. So this is like a classic insurance test question of, if the country of the United States is in a civil war and, someone comes into your home to occupy your home as a base and causes $15,000 worth of damage, is it covered? Answer is no. It's a strange thing. It doesn't really ever happen, but it doesn't cover terrorism. So if a bomb's dropped on your house, right? Let's hope that never happens.
Yeah.
But something like that wouldn't be covered. So insurance basically covers acts of God, not acts of war, terrorism, things like that.
Interesting. give us the quick bullet point. How do people lower their homeowners insurance? I mean, that's always a nice. I just went through this.
Yeah.
We
have been talking about that.
The number one was bundling.
Bundling is number one. There's a reason Geico, Progressive pump out those commercials, because bundling saves you money.
Mm-hmm.
Insurance companies would rather take on more risk for a little bit less money than, less risk for less money. So
sure.
they want to make more money.
Yeah.
So they can incentivize you to do that. And usually bundling, gives you like a 10 to 15% discount depending on which carrier you use. So it's always worth looking at.
Is that why they say 15 minutes for 15% or more?
Yeah, they were onto something there.
Yeah, nailed that out of the park.
Yeah.
Deductibles.
Deductibles are an easy way to change your premium.
Mm-hmm.
So that means up or down, like we talked about earlier. It kind of works in the inverse. So if you want to pay less money for your insurance, you raise your deductible.
Mm.
If you want to pay more money for insurance, then lower your deductible.
Sure.
So
shopping carriers.
Shopping carriers is a super easy way. That was one of the advantages of working with a broker like us. We're able to look at a ton of different carriers. Carriers like different homes, different types of risks. So some carriers love old homes.
Okay, interesting.
Some carriers love new homes. Some carriers love coastal homes. Some carriers love homes in the middle of nowhere.
Okay.
So it's good to work with an agency who has options for you, because depending on your home is, how old it is,
sure.
what type of material it's built out of, you're an agent will know what carrier's best, or what top 2 carriers probably should you work with.
I'm curious on your personal business model. So one of the things Rachel has set up in her business is once she's already done the loan for you, she has a software that automatically updates when they're eligible again for a refi, what the rates are, and it automatically will ping her hey, this person is eligible for a refi. They'll probably save money and also could do a cash out, and so that she can reach out and say, hey, this stage of life, you're trying to pay for kids' college, that type of thing.
Yeah.
Do you guys have something similar where kind of the shopping carriers at the end of the year, you're oh shoot, this person saves some money?
Yeah.
I imagine that there are probably insurance agents that are super lazy and they're just just leave it in place.
Yeah.
But if you're constantly
set it and forget it.
Yeah. How does that work in your industry?
So we do 2 things. The first thing is all the carriers we work with actually communicate directly with all the people we insure and give you your renewal policy, usually about a month and a half before it renews. It says, hey, Dan, your insurance is going up by 15%. Or, hey, Dan, your insurance is going down by 15%.
Okay.
We see that come across. So we get a report every day of renewals that are happening a month from now. So I get a report sent to me, hey, Dan's insurance is going up by 20%. And I'm thinking to myself, I should probably reach out to him about that, because first of all, you might have missed it, right? A lot of people just look at their homeowner insurance when they buy their home and then just never look at it again, because your mortgage company pays for it. You don't really see it.
Well, you're paying into the escrow account and then it's paid out from there.
Exactly, right? So it's kind of a set it and forget it. So we make sure to reach out to people. Our kind of rule of thumb is anything above a 10% increase is worth it for us to reach out. And a lot of people are like, why don't you reach out if it's going up at all? And the reason that is because especially this year, insurance is going up just like everything else is going up. And typically staying with carriers longer than just 1 year will actually help you in the long run. So if I switch,
there's a 10-year benefit to insurance.
100%.
Okay.
Yeah, usually there's a 3, 5, 10. So if I stay with the carrier for a year, jump ship. Stay with the carrier for a year, jump ship. Every carrier that quotes me, they can see my insurance history.
Sure.
So they're going to see, hey, Brandon's been jumping.
Kind of a
year.
Delicate balance, then, I imagine, is
exactly.
You have to kind of look at, all right, well, I have this one client that stayed with them for 10 years. This other one jumped ship every once a year for 10 years, and the guy who's with this one company, because of his tenure, is actually cheaper than this other person that jumped ship.
Yeah.
Okay, interesting. I didn't know about that.
Yeah. So again, we try to do what's best for our clients. We call it being humble experts, right? So we try to know what's best for our clients, but also we want to be good listeners. So if we have clients who are like, I really want to change, even though it's only gone up by 10%, and we try to convince them, well, if you keep it, you'll probably see a decrease next year. They want to change. We're fine with changing it. We also just want to educate people and say, hey, this next year it might go up again by 10%, or it might go up more.
Yeah.
So it is a delicate balance.
So I've got a couple I think, questions that maybe will help some people as they're transitioning from one phase of life to the next, right? So let's say I'm a young professional and I'm just getting to the point where maybe I can afford buying a boat or some jet skis, that type of thing. So obviously I want to insure those.
Right.
What may be some things that I also want to consider in the insurance world, maybe products I never would have considered before, that because I'm taking on these additional risks that I might want to even think about?
Yeah. So actually with you guys this week, you and your wife, I looked at your insurance policy. Your auto policy had lower limits of liability. So from what I know about you, right, you're a business owner. You guys have kids.
Yep.
You have a growing business,
Gonna
two
get a boat.
businesses.
Gonna get a boat sometime.
Gonna get a boat soon.
Yeah.
So liability coverages on policies are often underinsured, meaning if Dan gets into an accident on the way home, you know, someone gets hurt, this person sues Dan, your liability on your policy is only going to cover up to your liability amount. So I think you guys had maybe 60 grand of coverage.
Sure.
So if they sue you,
put all my dirty laundry out there. Okay.
yeah, man.
That's it.
So you're a great example.
Yeah,
so if I sue you for 100 grand, Dan's having to come out of pocket for that extra 40 grand.
Sure.
That's no bueno.
Yeah, we don't like that.
And the funny thing is adding, when I quoted your auto, I put you at 500 grand in liability.
Okay.
That maybe costs you $100 a year. That's it.
Okay.
From what you were paying.
Sure.
Yeah.
Sure.
Which is crazy.
Well, here's the reality, right? So when you go from driving a Corolla to driving a Lexus, as soon as you get in an accident, right? Oh, my neck, right?
Yeah,
oh, man, it hurts a little bit more. All right. Might faint it a little bit more.
Yeah.
Right. And so, I think that's the case with anybody who is now starting to potentially increase their lifestyle a little bit.
Yep.
We live, unfortunately, in a litigious world, whether you like it or not. And so if someone sees that there's capacity to pay it out, they're probably going to go after it a little harder than someone that they don't think it can.
Oh, yeah.
And so you want to get those coverages in a different way. Is that Ashton?
It is.
Just have them come through here. It's not a big deal.
Yeah. That's a great point. Yeah. So liability is always something we look at. And for you guys, we had this handy little tool where you could enter your insurance company and it sent us everything we needed to quote it. It sent us all your deck pages so we could look at it.
Okay.
So that way I know, hey, Dan has this type of coverage. I might suggest some things to him. Again, I'm not the world's greatest insurance agent. I'm just here to provide the information I know.
Sure.
So you can make an educated
You've got
decision.
resources. I mean,
I got
we talked
resources,
about
yeah.
before we started the podcast, we talked about like taking people from a 0 to a 3 on education.
Exactly.
Right. So maybe if Brandon was appropriately self-evaluating, he'd say, hey, I'm a level 6 or 7 knowledge. Right.
Yep.
And anytime you enter into an industry and you've been there for a period of time, you have resources, just like Ashton here behind the camera. You know, he's been in an industry for a little while. If he has a question that's proposed that he doesn't know the answer to, he's got somebody he can go to that he trusts. He goes, here's my mentor. Here's what he would say.
Exactly.
But that's just the reality of starting a business and being somewhat newer is you have to have those resources available to you.
Yep.
So kind of like I think we're also exploring like an umbrella insurance policy. How does that work?
So that has to do with liability again. So let's say, again, you get in an accident. Someone sues you for $1 million, but your auto policy only covers up to 500 grand.
Sure.
An umbrella policy really just increases your liability for everything.
Okay.
So
including the trampoline in the backyard.
you have your neighbor's kids on.
No, we don't have trampoline.
You double bounce them.
Yeah.
Yeah.
Well, no one's getting on a trampoline and not double bouncing.
Yeah.
Come on, let's be real.
My worst injuries have happened on trampolines.
Really?
Oh yeah.
You have a story?
There's a couple of stories.
I want to hear one.
Yeah.
Let's hear a double bounce story.
It was a brand new trampoline set up with a buddy.
Okay.
Right out of the box. The first thing we did was get on a roof and jump off the roof onto the trampoline. And he double bounced me as I landed. First jump.
Okay.
And I flew off. We hadn't put the padding on the side. So I came down on my knee on like a sharp edge.
Ooh.
Yeah. Yeah. You can picture the future on that one.
Yeah.
It was not good.
Yeah, I did one where it was an older one that was this was in high school, and they had just bought it as like a used one. Actually, you don't have to worry about it too much with noise. You're fine. He had the person prior, there was a small hole in it, and so the mom went through and stitched around it to like keep it from ripping.
Mom job.
And so we wanted to do double bounce, and I went to go double bounce, and my butt went right through it and hit the ground. I like bruised the crap out of my tailbone. It was like the kind of the similar thing. It was the first day that they had it, and we are like, let's double bounce it because we wanted to double bounce it into the pool. So it was next to the pool, and really safe practices here. But my butt went all the way through that hole and smashed into the ground. So
this is actually insurance related. Because trampolines are a underwriting question on every carrier, and it's, do you have a trampoline? Does it have a net around it? I think it is.
Okay, yeah, a little safety net.
Yeah. Same thing. Insurance companies don't want the added liability of
they're dangerous.
A trampoline that's been set up by high school kids. Yeah.
And so who was it? Who put it together? I don't know. My 12-year-old was in there with those Allen wrenches, and maybe not be the best installation practices. Yeah. Okay. What would you say are actually? I wanted to get. We talked about this a little bit before we started filming. With the increases of like labor and supply shortages and that type of thing. We talked a little bit this with Alan Strickland on some of the new construction stuff.
Yep.
I think a lot of people are nervous about what's happening with their insurance costs going up, and maybe they don't know, but like, hey, when you insure something and you have to replace, let's say something fell on the roof and you have to replace the roof, well, the labor and the supplies now are more expensive, and so insurance costs are going up.
Yep.
What's kind of the average? What are you seeing across the board?
Yeah. So what we've been told and what has kind of come into fruition from what we've seen, it's 15%. Mm-hmm. And I had a guy the other day try to argue with me and say, well, inflation is only 9%. That's what they're telling me on the news. Mm-hmm. I'm like, well, yeah, but material costs are probably up more than 15% of where they are year over year.
It's 9% across the board, across all things.
We can ask Ashton that question, what that means.
Yeah. Yeah. When he finally gets on the podcast.
Yeah, when he finally gets on the podcast. Yeah. But the basic answer is usually 15%, and that's because we see about 15% more expensive to rebuild your home. Mm-hmm. So, and that's simply because wood costs more, labor costs more. Mm-hmm. It's hard to even find labor right now, too.
We have a project going on, and I say one of my clients has a house that's being renovated in Larchmont, and it was like, well, we want this specific tile installed, and he's like, all right, well, my tile guy doesn't know how to do that, or I need to do it this tile guy, and he's 3 weeks out from even being booked in. So it's like, if you really want that, we're going to have to delay closing on the house by 3 weeks. And they were like, why would that take? He's like, I'm just telling you, like, between the labor and supplies. Yeah. He's like, not only that, if you get this color tile versus this one has a 4-week lag time on actually being delivered. Yeah. And so that's just something that I think a lot of people don't understand. If you've not been in the construction world at all, like how difficult it can be to get certain things done. If you are very particular about something that maybe isn't in stock, or you want a specific style of construction done, one, you have to have the lead time on the product itself, and then you have to have the right installer to be able to do it properly. Yeah. And so your expectations of getting it done by a certain amount of time just may be out the window. Yeah. So recession is the word of the day. What are some things, I guess we just kind of hit a little bit of it. What are some things people need to consider in the insurance world with what's going on in the economy that maybe they wouldn't consider 2 or 3, 4 or 5 years ago?
Yeah, the tension really with insurance is how much money do I want to save versus do I want to actually insure my home or car or whatever it is properly? Mm-hmm. I think that's always the tension. So because material costs have gone up, you probably should increase the dwelling value, what we insure your home to rebuild at. We probably should increase that 15%. Okay. And most carriers automatically do that. And it's something we pay close attention to. We had a client the other day call us and say, I don't want to increase it 15%. I just want to have it what it was at last year, which is fun. Again, humble experts. We're going to offer people what we think they should do and educate them. Sure. But again, the consumer has the final choice. Yeah.
You get somebody on a fixed budget that hasn't increased year over year, then they may not be able to absorb that.
100%. Yeah.
Yeah. Here's a question I think is this one just came to me brilliantly on the spot. In the insurance world, what's the hill that you would die on, right? Fighting words like I'm not bending, like fight me, bro. Another insurance guy is arguing with you. What's the thing that you're like, I will die on this hill?
I have an argument with one particular real estate agent, and she probably knows who she is. She is fantastic, great person, but she wants the cheapest coverage always for her clients, which comes back to earlier conversation. Do you want the cheapest, or do you want something in the middle that's competitive but also the right coverage? So we talk about with her, it's called water backup coverage. So this actually goes back to an earlier conversation we had about what's covered. So your pipes in your home actually are not covered if they leak or break with typical homeowners insurance. You need a coverage called water backup coverage.
Okay, this is new to me.
We put that, I put it on your policy, don't worry.
Appreciate it. See, have the right person.
Yeah. So if that ever happens and you have that coverage, well, good for you. You had a good agent that put it on for you. Okay. So this particular real estate agent, she
wants the cheapest possible.
Wants the cheapest. And again, it's usually like $75 to $100 extra a year to put it on, depending on how much coverage you put on with it. But she doesn't want that for her clients, which I get it. A lot of times they're just trying to make deals work. I get it. People are in a pinch. It goes a little bit back to what you were saying earlier. Yeah.
Like sometimes because let's say the loan's getting underwritten, if the numbers are just that tight, that's what you have to do to get them in the house. Now you close. Hopefully Brandon's calling you a month after you close and go, hey bro, I realize I understand the bank said your DTI ratios wouldn't allow this coverage, but if you're okay with it, we need to increase your policy year over year by $300. I get it. Nobody wants to hear that. We'll say $360 to make the numbers easier. But $30 a month. Because if any of these things go wrong, of which you told me you have polybutylene in your house, we need to have this because if this goes wrong, you are up Schitt's Creek without a paddle.
Yeah.
So I've seen that happen before. I don't like doing that. But sometimes you have to kind of figure out the gray areas and navigate those a little bit.
Yeah.
What's another potential coverage in our area that people don't know about, maybe specific to coastal Virginia?
Let's see. I'd come back to the deductible question. So a lot of people just assume they're stuck with their deductibles when they get a quote. You can lower your deductibles. And if one carrier can't do it, so I know a lot of times, I'm not going to go into who, but big insurance companies in this area, well-known, top 5 insurance companies in the country won't cover a lot of coastal Virginia.
Sure, we'll put the color of the logo and blur it out, but everybody knows who it is.
Yeah. And so they won't cover coastal Virginia, or if they cover it, they will only do like a 2% wind and hail deductible.
Okay.
So if you come into an agent like us, we will say, hey, all right, here's coverage for 2% if you want that as your deductible, or you could have $1,000 wind and hail deductible, and here's a carrier that loves doing that because that's what they specialize in. So I think knowing that and educating yourself, we just had a tree fall on someone's house yesterday, and they called and said, what's my deductible? Why is it so high? And I had to explain to them, okay, well, you wanted a 2% wind and hail deductible. If wind or hail caused this tree to fall, which it often does, that's what you're paying.
Yeah.
So we have that conversation a lot. We try not to shy away from offering someone to upgrade. We always give a better best option, and usually the best option includes a low wind and hail deductible, just because we know you end up paying a lot of money if you don't have that. So
yeah. Flood insurance is a thing that's pretty common in our area. Certain areas require it, certain don't. And a lot of times before we even go out and look at properties, I will call you and say, hey, or I'll send you an email and say, hey, we're considering this property.
Yeah.
This is super important for people to understand, especially if the house is paid off. Because the listing agent may or may not be the most the best potential source of information sometimes when it comes to what the cost of insurance, because they will go out and get a quote and put it on there as like, here's the cost of flood.
Yeah.
And again, they kind of go with the lowest possible deductibles to hopefully get you to make an offer. And especially in a multiple offer situation, you could potentially be lured into making an offer on a house and then be under certain presuppositions of what that's going to be. And then you go and actually get the quote and you're like, oh, this is a little more expensive than I thought. I've actually written into contract before, flood insurance not to exceed a certain amount, or I get the option to back out of this contract. In a less aggressive market, right? So like flood insurance quote shall not exceed X amount of dollars, or buyer has the right to back out of the contract.
That's good.
If it's been sitting on the market for 30, 40, 50 days and we're the only offer, sometimes that's a nice safety net to be able to back out.
Yeah.
And in some cases, like my house where I live in Larchmont and I have a basement,
Yeah.
You know, when I first got in there, that was a good safety net to have on my, you know, my contract that I put in there.
Yep.
So when I'm evaluating flood insurance, are there things that like flood vents and like what are some flood mitigation things that people can explore to help lower their flood insurance?
Yeah, so a lot of it has to do with how your home was built, right? So if your home was built in a crawl space, that's always an advantage with flood because the water will just go under your house if it has flood vents like you're referring to. If it was built on a slab, there's only one place for that water to go if it rises, and that's usually in your house.
Yeah, slowly
So
through the concrete or
foundation type is huge. Obviously, in places like Sandbridge or the Outer Banks, we see a lot of pilings on stilts. That's always great to know about with flood insurance. It's usually a lot less, if that's the case, less risky, right? So I'm not going to lose my house or personal property in my house if it's built up 10 feet versus on a slab on the ground.
Okay.
So,
question that I should have asked you that I haven't.
yeah.
Anything I should have asked you?
Oh, well, maybe about flood insurance. I forgot to say your homeowner's insurance doesn't cover flood. I don't know if we made that clear. You have to get a separate policy for flood insurance.
Yeah.
And I would
Sometimes that's required by the bank
It
to
is.
underwrite the loan.
Yep.
Other times it's not.
Correct. Yeah. It's all based on your flood zone. So to figure out your flood zone, there's a website called Risk Factor, I think it's called now. So just type in.
It was Flood Factor.
It
now.
was
Yeah.
Flood Factor.
Yeah,
they changed it.
I think they're trying to go to a paid model, though. Have you seen that they've changed up?
No,
They
really?
have a premium.
Oh, that's going to kill people like me.
Yeah.
I just go on there, Google Risk Factor, click on it, type in your address, click search. It'll tell you exactly what flood zone you're in, what the potential risks are.
I think it still does, but they had some really cool tools on there where you could select like the last 3 storms, and it would show you what the estimated water rise was during that storm.
Yeah. Did they take that away?
I think it's still in there, but I think they're trying to turn it into a premium
They
option.
better not.
I think it's. I mean, it's pretty smart.
I mean, I'll probably buy it.
Yeah, it's a great tool.
Yeah. So I would say know your flood zone. Find someone who can figure it out for you if you can't. Yeah.
Sure. Yeah. This is kind of a harder question to ask. What would you say is the average policy-ish, $300 to $1 million on a property that is not in a flood zone, but they want to get some basic coverage?
If you're not in a lender-required flood zone, that is usually really easy to get flood insurance. I would say $500 to $700 a year.
Yeah, I think the most I've ever seen is $1,000.
Yeah. It's usually pretty easy to write flood insurance for someone who's not in a tough flood zone. Yeah.
I think one of the things I think about if I'm advising someone who's looking at buying a house that's not necessarily in a flood zone, like a mandated flood zone, is talk to someone like you or ask me when you're evaluating is, hey, how close is your house to that flood zone? Because if we have a big enough storm come through, well, if you're 7, 8, 9, 10 houses and there's 5 feet of like elevation, range, you're probably fine. But if you're one house in from that mandated flood zone and it's only like a 1/4 foot rise, that might be wise to at least, even though it's not lender required, it may be wise to go ahead and get that really cheap policy because all it takes is the right storm with the right winds coming in the right direction for it to be an issue.
That's good. Yeah.
That would be my advice.
Yeah.
So, all right, man. I think that's all I got for you today.
Sweet.
We can always do a part 2.
I'll have to think of more
for
stuff.
the people who want to give you a ring at home, where do they find you?
At home?
Don't
call me at my house.
Yeah.
No.
The people who are at home watching this
Gotcha.
and want to get a hold of Tidewater insurance brokers to bundle and get savings. How do they get a hold of you?
So our team, 757-302-5639.
Okay.
Or you can email me. All of our emails at our company is just our first name at Tidewater Insurance. So Brandon at Tidewater Insurance. You can also email info at Tidewater Insurance. All of us see that.
Okay.
So
cool.
Yeah.
Well, thanks, man. Thanks for coming on.
For sure.
See ya.
Thanks for having me.